Okay. What's good, everybody? Welcome back to another webinar where obviously, everybody knows how the webinars already go. We're going to pretty much bring down my watch list. So very interesting to see the news event, how it impacted the markets. I haven't been personally trading these last few days, the last positions that I did take, or last week. I haven't traded at all, really. But when we look at gold on a weekly time frame, obviously the 1644 area of support is an area of support that price have been rejecting over the last few weeks, all the way since literally September. So now that price is currently trading under this area, and we've seen how prices reacted off of this area, I would like to see price continue to go down overall. So as of right now, my overall bias, if that's what you want to call it, on gold is still bearish unless we can get a break back above 1644. A break back above 1644 would signify that there is still buying pressure inside of this market, and we could see price potentially go up, which is where we saw price initially reject this area. I believe over the last few days, we saw price push above this 1644 area, come back down, retest, reject, then retest again, basically held the support, and then price went all the way up into the 1660 target area. Now that price is currently trading under this area, realistically, the only area I would like to potentially go short on gold again would be this 1640 area, just because there's a lot of indecision in between these areas. And again, the example I've gave you guys before is if we have a 90% chance of going up here and a 90% chance of going down here and a 50% chance of going either way here, why would you take the 50% chance trade when you could just wait for the 90% setups to actually play out and start looking to take positions in that area? It's the very same concept as over time, as you continue to progress in your trading, you're going to take less and less trades, but you're going to use heavier size and be more selective with the trades that you do end up taking. So that's kind of the way I see gold as of right now. I really wouldn't be too interested in selling, especially after this entire movement we saw today. We've seen price go from basically 1670 all the way down into 1630, which is a huge move. So there is some form of a pullback that I would be expecting, and that area is going to be roughly the 1640 area, where I would then look to sell it back down into these lows, being this 1631 area, possibly even the 1622 area. Worst case scenario, what you could do if we don't see some form of a pullback is maybe wait for a break and retest of this support zone that we have here at 1632. Obviously, if price breaks the 1632 area, then we could easily see price come down to the 1622 area. And then we'll have to wait and see what happens at this 1622 area. I'm going to be expecting there to be some form of a bullish reaction out of this area, maybe a short-term one, but then we may see price actually break through that area. So really, it comes down to seeing if price actually holds this support zone or not. Now, GJ continues to pull back steeper and steeper into our daily zone, again being 168. So I would be very cautious with GJ on this area. This is an area where I would look for GJ buys. Anything under, call it 167, I would be very cautious to look for continued buying opportunities. I would kind of wait and see what happens in this area so we can try and avoid getting faked out like what happened over here on this trading day, where essentially price broke under, but then the following day price continued to go up and make new highs after that. So this is a previous area I would like to see GJ actually hold. And if obviously GJ holds this 168 zone, we can easily see GJ come back up into this 172 area, which is kind of what I would be looking for here on GJ. Ultimately, you want to wait for the rejection of the support level. So let's call it, if we want to be a little bit more accurate, we could look to start taking buys anywhere between kind of along this zone down here. Let me quick. This is the area where I would be looking to buy GJ here, as long as this area of support can actually hold. If this area of support holds, great. We can look for buys all the way up until 170, then possibly 172. Anything under that area, I would be very cautious. We could see a continued drop back down to 165. So really, it's a game of ping pong. If price rejects this area of 167, call it 500, we can easily see 170, then 172. If price breaks under this 167, 500 range, we could easily see 165. 500, which is a pretty big move as well. Then if we look at the NASDAQ, so looking at the NASDAQ, we have support all throughout this range right here being 10,000 or even 11,000, we could call it, right? This entire area is an area of support that price just closed under on the daily time frame. So essentially what I would wait for in a situation like this for tomorrow is to see if price can give us a pullback to this 10,011 or this 10,900, 11,000 range, and then look to see if price continues to hold that previous area of support as a newfound area of resistance, and then look for the NASDAQ to come back down to this 10,750 area. That's kind of what I would wait for on NAS. Nothing really much other than that. I would just kind of wait and see if this previous support holds as resistance, pretty much this area right here. Now with US 30, let's take a look at US 30. So US 30 did reject this area on the daily time frame, which is quite surprising, but we've seen a huge bullish rally literally over the last few weeks on US 30. So it is interesting to see how far prices actually pulled back. I didn't really expect price to pull back this much. I thought there was going to be some indecision, maybe even a reversal at around 31,600, but price continued to rally and go and go and go and go. Now we're starting to see price actually go down. And looking at US 30 here on the daily time frame, the obvious area I would look for US 30 to go down to is this 31,600 range, where we have this resistance and we have this major support. There is liquidity in this area, so that's where I would expect US 30 to go down to. And then we'll have to wait and see what happens there, because obviously I don't know if price is going to reject this area. I don't know if price is going to break this area. We'll have to wait and see what happens. If price does reject this area, then we can expect price to come all the way back up into the 32,400 range. If price breaks this area, then we can expect price to continue to go down to our next major support zone, which would be this 30,600 range down here. As of right now, in terms of like a setup and what you could look for over the next few days, the way I would actually play this is based off of our current market structure and trying to line it up with our previous market structure areas. So let's actually go down to like an hour time frame, right? So we have resistance throughout this range right here. Then we also have resistance throughout this range right here. So if you're going to continue to sell, I would just kind of look to play US 30 in between these areas of support and resistance on this intraday time frame. And we have the next support zone here. So it's kind of like, okay, well, let's see if we can get a pullback into either this 32,150 range or this 32,250 range. And then let's see if price rejects that area, any of these areas, to give us a possible sell opportunity back down to 32,100, possibly even then 31,844, which is kind of the area we'll look for. And then obviously if price breaks both of these ranges, then we can expect price to go back down into 31,600. That's kind of how I would play this current US 30 market structure, is all basing it off of our previous area of market structure, where if we look at it, we have resistance throughout this range here, but then we also have some form of resistance up here. So that's kind of how I would play it. If you're going to be trading this on a smaller time frame, such as a 5-minute time frame, then at a point like this, I would take trades like, let's say US 30 were to come up into this area here, I would like to take a position from this point to maybe this point down here. If US 30 were to come all the way up into this range here, then I would look to take a trade from this point to this point down here. Now, if US 30 does break above this area of resistance, then I would expect US 30 to come back up into the next major area, being 32,418. And if price rejects that area, then we could then see price continue to go down. But honestly, it's a waiting game. We have to see what the market looks like and what price action looks like a little bit closer to the New York Stock Exchange open at 9:30, where you could then make a better decision, because overnight US 30 can continue to fall, which would completely change the setup, or it can just completely pull back all the way into this zone, which would then be a completely different setup for the market open. Now, does anybody have any questions on anything I just kind of went over based off of this price action?
Yeah, Raul, could you go to GJ? Yeah, so like on the 4-hour time frame or even on the daily, essentially you said you look for buys from like the 16800 or that yellow zone there, but would you not consider a break of structure? Because you see how price broke under the lows at like 16900. Where price formed that bearish engulfing and then the bullish engulfing right after that, would you consider that like a significant higher low?
The way I see my structure points right now in this overall trend is we have a high, a low, we have a high, a low, and then we have a higher high. So this is the main structure points that I personally see. Obviously on the 4-hour time frame, price is pulling back and did break under this minor higher low area. But then the way I've traded for the last few years is okay, well, if price is trending bullish on the daily time frame, but the 4-hour time frame just broke structure, it could possibly be because we're going to form a higher low on the daily time frame, which we would see a break of structure on the 4-hour time frame, and the same thing goes for the hour time frame. If price is trending bullish on the hour time frame and or on the 4-hour time frame, and then we see a break of structures because we're going to be doing some form of a pullback. That's kind of the way I see things. Now, it is a little bit different because if this weekly time frame closes under 167 and the weekly forms a bearish engulfing, then I would look for sells the next week. I would look for a pullback into this area and then look for sells. So that's why we have to use all of our time frames together, because as of right now, price is broken and is trading above support or previous resistance, right? Yeah. If price closes under on the weekly time frame, then that's going to show us signs of a rejection, right? And then at that point in time, I would look to sell.
Okay, thank you.
Yeah.
Oh yeah, Ro, I got a question real quick.
Yeah, bro, it's good.
What you call it for your intraday levels, right? Do you wait for like 2 4-hour candlesticks to close below? Because most of the time I wait for like 1 4-hour candlestick to, like, let's say close below, let's say intraday level of support, right? Then I get it on the 1 hour, right? Then most times like the 4 hour is making a pullback and I usually get stopped out. But sometimes like I go to like it hits my take profit, and I just wonder, like, how do you go about those like intraday levels?
I mean, it depends on what I'm trying to do overall. If I'm just trying to catch a small move or if I'm trying to catch a big move. So basically, like if I'm trading based off of this hour time frame and I see price break under the support, right, I'll wait for a retest and a rejection off of a 30-minute time frame, right? So as of right now, this would be the candle that broke under this area. This is the candlestick that confirmed that we've closed under. So this is the confirmed break, the combination of these two candlesticks. I would wait for the next following candlesticks to come back into this area, give me some form of a rejection, which will then give me the entry to sell.
So it basically depends on like the time frame you're looking at, right?
Yeah, because if this is going to be an area based off of like the hour time frame, then
yeah,
I'm going to trade it based off of the hour time frame.
Okay, gotcha.
Okay, Raul. Hello, Raul.
What's good?
Yeah, I want you to go to NAS 100 5 minutes time frame, and I want to know how you would have taken the entry for the sniper entry when it found resistance. Yep, up there.
Up here?
Yeah, that resistance level.
Well,
on the 5 minute. On the 5 minute.
I don't think I would have been able to take a position from this area simply because it broke all the way above this area and continued to make new highs until over here. It's a lot easier said than done when I'm trading live versus I'm giving a breakdown. But again, like the core principles stay the same. So completely disregarding the news event that happened today, which is where we saw price completely shoot up. What I talked about last time on the breakdown with the NASDAQ and how you could have potentially capitalized off of this move is essentially price broke under this intraday level of support. We have this double top with the neckline break right here. So I would have waited for price to pull back into this area here. And then once I would have seen an hour time frame candlestick or a 30-minute time frame candlestick with a rejection is then when I would have maybe gone down to the 5 minute. But ultimately, every situation is very different. With this choppiness, I would have maintained myself probably on a 15-minute time frame, a 30-minute time frame, identified the overall median of where price is currently rejecting this area, which we can easily identify. The overall median would be right here, right? So let me get this out of the way. Change colors, right? This would have been the highest point that price should reject before invalidating the trade, because we've seen price fail to break above this area multiple times. Depending on the time of the day, let's say it's brand new, market just opened up, you could have had sell signals all throughout this entire area, starting from this candlestick on with the stop loss above this area here, and you would have been just fine. A sniper entry, I mean, everyone's going to determine that differently, but a sniper, you're not going to know if you're going to get a sniper entry until your sniper entry actually happens. Because I could tell you to set sell limits at your major areas and price could tap into it and completely reject, or tap into it, consolidate for a million hours and then completely reject, right? So I would just more or less focus on why you're taking the trades and where you're getting in and how you're getting in versus on trying to get like a zero perfect, no drawdown entry. Cause then you're just adding so many more extra steps and it's going to ultimately hit your confidence when, you waited like 3 hours for an entry, you take the entry and then you take a loss. Like, oh, well, why did I take this loss versus why did I take this trade? It's kind of like a little bit different to, explain. I wouldn't really, what would the word be? I don't know what the exact word would be. As long as you have a criteria as to why you're entering the market and you're following the criteria is more important than trying to get a perfect zero drawdown entry because that's not going to always happen. When it comes though, and you do have a zero drawdown entry, those are the trades that you pat yourself on the back on because they're the least stressful trades.
Bro, quick question, bro. Like with what you just said about getting in on the thing. So like, let's just say this Nas example because you got Nas drawn up. Let's say it rejects off that level you had right there. Let's just say, would you get in like a little bit outside the gray area? Like, all right, let's right above that cursor, right there. Like, let's say it rejects off that. Would you get in a little bit after that, or would you wait?
If it rejects off here.
If it rejects off there, let's say you missed that and it didn't come back, would you get in on like one of them other two candles down at the bottom?
So like if I completely missed it and it's like right here.
Yes.
No, I wouldn't get in. I would wait for a break of the support and wait and see if price can retest and reject this area for a break and retest. But then I'm trading a completely different setup, right? Essentially, right once price broke under the support level here, because price can come back, bounce off of the support level multiple times, right? So I went for the confirmed break, which essentially we had the candlestick close here. We had another one close there. That's the confirmed break. Then we had price pull back, retest, reject multiple times where I would then look to add an entry along this area here with nice stop loss above this SMA and then above this high right here. And then probably look to target the lows for a quick 3-1, 2-1 position, nothing too crazy. If I hold past that, I know it's because I'm greedy as shit. That's how I would have taken that position. Ultimately, my main setup was to look to take a position along this area because I know it was going to be the highest quality versus taking a position like down here or maybe even down here. Another alternative that you could have done as well is go up to a little bit more of a higher time frame, such as a 30-minute time frame, and then identified that we had a median of support around this area here, then go down to a 5-minute time frame and look for that break and that retest, which you would have gotten maybe around this area here, which would have been a different setup as well. Probably a way better setup than the one I actually just explained. But that's another alternative that you could do. Because again, like your goal is to try and get into the trade as close to the area of supply and demand as much as possible, which you could see that play out very well right here. Just a lot of choppiness overall, though, a lot of big wicks to the upside. So you also got to keep that like mental composure in mind and really set your stop loss area in a good area, because if you're taking the break and the retest and you decide to take the position literally right here off the rejection, which is a pretty solid entry in my opinion, right? Your stops have to go above the highest point before it rejected, which essentially would be right here. And then, I mean, imagine you're in drawdown 75% here, 60% here, then maybe 25%.
Yo, Raul.
What is that? Hold on. My bad. Somebody was calling me on Discord. I don't know what the fuck that was, but it's over.
Yeah, bro. I was like, that ain't me. Like,
I was so confused. I'm like, someone's phone going off. I guess Discord's on like some spooky season type of shit. But yeah.
Hey, yo, Raul. So let's say you were to get in on that trade right there that you just explained. Would you lower your risk because it's not at your higher probability area? Like, so would you like get in on it like 0.5% or something?
Yeah, like if I normally trade with like, I'll probably cut the risk in half. I normally trade with like 6 lots on NAS. I'll go in with like 3 lots, just because this area would have been the area I wanted to get in at essentially.
Yeah, good.
Hey, Ro, I have a question.
Yeah.
So when you used to trade like the London session, and what I realized, so like I've been taking trades like once I get the 1 a.m. close and it rejects, I see that I get like let's say for example I'm taking a sell at resistance and I get that bearish engulfing. I take it and I realize it's like I'll take it. It forms like somewhere like 115, and I take it. I realize it wicks me out like most of the time from my stop loss, and my stop loss is not too short. I know that for sure. Like I give it like some decent amount of space, but I realize that it does keep pushing price up. Is it that you'd say to really wait on the London session to really wait on the volatility to kick in, or do you usually enter like on a double top mostly?
Like, I mean, that's the thing about trading or having positions between or having positions before the market actually opens. There's going to be more volatility that comes into the market, and there may be a liquidity grab. So you see that a lot of your positions are getting stopped out before the market actually opens, but the positions that you take after the market opens don't get stopped out as frequently. Then I would avoid taking positions before market actually opens.
Yeah, because usually I just try to, if I see it engulfing, I just try to get it as near as resistance, and then because I realize most times if I do wait till market open, it probably move like further away from the resistance, and then it causes majority of the trades to be missed.
Yeah, you just got to look at the patterns in your trading journal and see what works best for you.
Okay. All right,
Yeah,
cool.
yeah. Raul,
That's good.
Raul. Yeah, if you're, I want to know, like, do you wait for a candle to close? Let's say you see your perfect setup. Do you wait for the candle to close, or do you wait for the candle to form a high before you enter the trade?
I'm not too sure what you're trying to ask me.
Okay, like on the 5 minutes, like yeah, up there, where you drew that resistance.
Okay.
Yep. You see that long spike up there?
This one?
Those long, no, on the news candle. Yeah, this one, yeah. Yeah, like if you wanted to take let's say it wasn't news or whatever, but let's say you wanted to take an entry of those weeks on the 5 minutes up there. Like, would you wait for the 5 minute candle to close? Like one of the black candles, would you wait for it to close before you enter, or because of that week, that long week, would you wait for it to close, or how would you
Probably
enter?
I would average into a position. So I see that this is when the news event actually dropped and we saw price pump up, but then the news was actually reported as negative, and I wanted to look to set or stack on sell positions again. Like the analysis essentially and the way I would get into the trade would be completely different than how I would normally trade, because I would just start entering positions on the opposite direction in a way smaller scale until price starts going in my direction. So essentially, if price is going bearish, I'll add maybe a lot here, and it continues to go bearish, I'll add another lot, wait for price to pull back against me. If I have a general stop loss area, let's call it 11,450, which is way up here, which is kind of excessive. But just to give you the example, I would continue to actually stack in on the positions, because the way I look at risk is, okay, well, this is like a general zone that we have here with price, right? My stop loss area is going to be roughly here, and I want to lose at most 20 grand on this news event if I'm completely wrong. So how many lots do I have to take into account before I actually hit that negative equity, right? And then from there is when I'll decide, okay, well, if I enter a lot here, from this point to this point, that's only 4 grand, and I'll continue to add until that point. If my stop loss gets hit, then oh well, I knew the risk that I was taking. If price goes in my favor, then fantastic, I made money. That's exactly how I traded the last news event that I traded, which was Jerome Powell speaking.
Okay, thank you.
Yeah, I'll never go into news event with just like a single position with my entire risk.
Raul, when you were trading GJ, obviously you don't trade it so much anymore, but was there such thing as like you would wait for like a 4-hour rejection every trade, or would sometimes you wait for like a more minor rejection, like an hour rejection? And if so, why?
The thing is, I'd most likely wait for the 4-hour rejection almost every time, because a 4-hour rejection is going to be roughly at 1 in the morning anyways. That's 2 hours before session. So that's typically what I would wait for.
Yo,
So,
Rahul, what time frame did you mark up your gold box and your red box from?
the yellow one was based off of the 30-minute time frame, hour time frame, right? And then the red one was based off like a 15.
Thank you, bro.
Yeah,
Hey, yo, what up, my brother? How you doing,
it's good.
bro?
What's good, bro?
Hey, brother, can you go to US 30 4-hour time frame on Sunday market open? What I noticed that US 30 on Sunday when it opened up with a gap, and I was looking at the
Sunday?
market the whole time. I started noticing that we built some type of support. I considered that a new lower high on the higher time frame, and then based off that level, that's where I started trying to look for buys to see if the market will fill up the gap, and eventually it did. So I'm kind of thrown off on what was the main impact. I know we had news and all that stuff, but there's like a little gap on the opening
On
Sunday.
Sunday, you're trading
Yeah.
Sundays?
What was that?
You're trading Sundays?
No. I seen the market the way it opened. I didn't trade that day. I just looked at the market the way it opened, let it build structure, and then after that, I noticed that there's a gap, and those gaps, I guess, I don't know if they need to be filled or how that market go about, but eventually it did get filled, which was yesterday.
I don't see a gap.
No, then it must be the.
That you're using.
What do you use? Oanda or FXM?
Oanda.
Oh, then yeah, that's probably why I've probably been using the wrong one.
I mean, ultimately, I would use the one that the brokerage provides you. Yeah, they're going to give you the best data because you're trading on their platform, their liquidity.
Yeah. So you'd consider just trading off their platform instead of looking at TradingView?
Yeah, I mean, I only really do TradingView to do markups for breakdowns and things along those lines. When I trade, the majority of the time I don't even have TradingView open. I just have my MetaTrader open.
Oh.
Bro, that shit is so hard to mark up shit though. It's so ugly. Like the fucking 90s.
I mean, to me, it doesn't matter, how good it looks. What's more important is I'm getting the data that I need to be able to interpret.
Yeah, that's true. Yeah, like I've been like both, but like yeah, I just mark it up, but then I just keep in mind like that the sometimes the one I use and the broker they be off a little bit by a few points. I just make sure it's not a lot. Like it might be like 2-3 points, which ain't no big deal.
Well,
but
that's why you want to trade based off of what the brokerage is providing you.
Yeah.
What does a Level Up Society use or
ACAP?
Bro,
yeah.
What time frame you use most for direction of like the whole trend?
All of them. You can't disregard any time frame.
So like you will use like what I mean is like for like overall direction of the market, like you will use like 5-minute structure for that?
I mean, you want to use all time frames at all times, but if I'm going to use a more concrete time frame, then I'm going to be using the daily and the 4-hour along with the weekly.
Yeah, that's what I was asking. All right.
Yo, Raul, you hearing me?
What's good, bro?
All right, so just a follow-up question on what another you was saying. So sometimes what I realize is that structure, like let's say you're waiting on a trade for gold to reach support, and what will happen sometimes is that it finds support in like the late Asian session or sometimes London session. You might not trade those sessions, and you wake up in NY and realize that price probably moves a little bit further than the support like further away, and you might find that you're taking late entries. In those scenarios where you're like waiting for price to approach support, and let's say find support in the Asian session, would you take positions from the Asian session, or you just wait for a pullback in the NY session and take it there?
Well, I don't trade, especially now with the indexes. I don't trade Asian session at all. If it's not New York session, I'm not trading.
So if it finds support in another session and you wake up and it's like a good distance from support, you're just gonna sit on your hands and chill.
Yeah, I mean, like if I create a hypothesis on where I see the market potentially going, and I see that the market is at an area where I would like to take a trade from, but it's 8 o'clock at night, then I completely wait until the morning and see what actually happens, which typically, like if I was in a position where I'm not doing webinars, where I'm not constantly doing chart breakdowns for all of you guys, and honestly, I wouldn't even be looking at the market at this time. Like my trading routine would be composed of pre-market hours or pre-market analysis, roughly like 7, 8 o'clock in the morning, and then post-market analysis like 6 p.m. and then I'm done. Like I'm gonna go on with the rest of my day. You know, I'm not constantly on my phone looking at every single take on every single session, you know?
Okay, cool. I get you.
Bro, real quick, pre-market analysis. So like you said, just like you do kind of like an hour before, and you kind of just like mark up your charts real quick, and then just kind of like all right, if it does this, I'm gonna this.
Yeah, basically, you have to have a game plan. If price does this, then I'm going to do this. If price does that, then I'm going to do this. You know, and I like to give myself at least an hour, 25 minutes before, you know, just to give me enough time to really make it the most educated decisions that I possibly can.
All right, yeah, bro, I'm gonna try to do it. Bro, I lost control today, bro. I was gambling.
I mean, bro, that's the thing. Like, you have to have that self-discipline, you know, as you understand the risks that are involved, and you know, great. I mean, sometimes gambling pays off. Sometimes, you know, you're gonna be blowing your account, praying to God that price goes into your favor.
Bro, but see, the thing is, I've been using small risks, so I only lost like I lost 3%, but you know,
nothing.
Yeah, bro. I mean, that's the thing. This will be my first losing week in like 6-7 weeks. But it was no trading plan though, bro. So I was disappointed that I lost control and started gambling, trying to scout. But you know, I was like, nah. But I mean, bro, it was just bad. It was just I don't have to do it anymore. I'm like, nah.
So I'm like, last question, Raul. Do you stay out of news completely?
What?
Like, do you stay away from news in terms of, let's say for today with the FOMC, do you trade? How long after the news day do you trade? So like for me, news came out at like 2 o'clock. Do you cancel that whole trading day, or how long till after the news?
Yeah, when there's a big ass news event, like I cancel the entire trading day until the news event if I'm going to trade the news event. If I'm not going to trade the news event, then I scratch that trading day off as I'm not trading today.
All right, so my second question is, how do you decide which news event you're going to trade? Like, how do you know, like, how do you kind of weigh, you're like, okay, this one I'm going to take, this one I'm not going to take? Is it that if it's close to support or what? How do you decide?
It just depends on the actual news event versus what's predicted versus what the actual results came out to be.
All right. Okay, cool.
Yo, Raul, so like today I entered in on a position on Nas like around, it was like 10 a.m.-ish. And I saw, like I did my pre-market analysis and saw that news was coming out at 2. So like in a scenario like that, I just figured, okay, if I can enter in a trade and be out of the market by 2 o'clock, you know, I won't run into any issues. Would you say that's like a good thought process just based off of when news is coming out?
Yeah, you could. What the thing is, like a lot of the times when there's like a big news event that's anticipated, you're typically going to see like a lot of chop, which I'm surprised, like looking at the NASDAQ right now, don't really see much chop. I just kind of see a straight move down and then, you know, huge move up and a bigger move down. honestly, it just comes down to trial and error to see what suits your personality. Because I could be like, yeah, that's great, go for it. But then when it actually comes down to you putting in and taking those types of trades, it may not always work out for you. So,
Yeah, because like I won that trade today, and it was like I saw Nas dropping, so I'm like, this is obviously waiting for the retest, got in, and I was out way before too. So for me, it worked out exactly how it was supposed to. But yeah, I feel.
Yeah, well, I'm glad it worked out.
Bro, you made like, was it 150K in 5 trading days? But I'm looking at Trade Keep, and then there was like a 14K loss on gold, which obviously is nothing. But do you remember like the loss and why you lost? Like, could you go over it if you can remember? And like what you noted down in your journal?
Yeah,
I
basically,
think it was.
I don't remember if it was this area, if it was this area down here. It was one of these two areas. Let me open up my Trade Keep real quick.
I think it was the 28th, if I found it correctly. Yeah, on Trade Keep, the 28th. One trade for 14.8K.
So it was this area down here? Yeah, I mean, it was pretty simple. I remember this trade. Basically, what I was looking at doing is just simply buying gold along this area. We had 2 rejections, 1 rejection here, another rejection here. Then we had an engulfing candlestick right there. Went down to a 30-minute time frame. I believe I saw this engulfing candlestick pattern. That's when I'm like, okay, I'm going to take this position. I entered a trade here with my stop loss under the low, and then my target was up here, and then I was just wrong.
So for your journal, is there anything that you would note down that you would do differently, or do you just chalk that up as that one that didn't go your way, but the probabilities were in your favor?
Yeah, I just chopped it out as it just didn't go in my favor.
Okay.
Because we had the 4-hour rejection, which looked great. The one thing that I do remember adding was like this wasn't like the strongest engulfing candlestick pattern, but what I did like about this pattern is that we had this kind of formation where we had essentially low, lower low, then a higher low, which, you look at it, you can obviously see that price is starting to push up a little bit. And then take a position somewhere along this area, I believe.
Right, well, on that same chart, right? How many, or let's say you were looking for the buys at that support and your first attempt at that fell through, you took a loss. How many times before you give up on that position? Because, sometimes you might be early to an entry and you take the second signal and the trade goes in your favor. But sometimes you can bleed your account just committing to that buy and you're wrong 3 times in a row and you're down maybe 4%. So how many times before you say, all right, I'm wrong on this, I'm gonna let price do its thing and see what happens next? Is it after that first trade, second attempt? What is it?
That's it. 2 attempts.
2 times? Or
that's it.
All right.
I only allow myself to take at most 2 trades a day. Sometimes I'll take multiple positions. That'll count as 1 trade in my book. But right now, as it speaks, I'm only taking a maximum of 2 trades on a single day, which is working out very, very, very well for me. It's allowed me to really manage my risk very appropriately. I mean, if we just look at like my stats here on Trade Keep, I'm up 100% in 5 single positions. You look at this, my biggest trade was a 50% gain. My worst trade was a 5% loss. It's nothing compared to the wins. So I really try keeping my losses as small as I possibly can while really trying to like maximize my reward as much as I can. I mean, my smallest win was 4%, my biggest win being 50%, and my kind of average win is anywhere between 12, call it 15%. This one was 20%.
Good shit.
Yeah.
Yo, Raul, quick question on your course. There's a section about your pre-market routine or analysis, right?
Mm-hmm.
Okay, I'm gonna check it out. Appreciate it.
Yo, Raul,
yeah.
How do you develop more self-discipline with trading?
You gotta be disciplined in other aspects of your life too.
What are aspects in life that could like help someone become more disciplined, per se?
Bro, if you're somebody that's super lazy, like you get up in the morning, you don't make your bed, you start getting up in the morning every single day at a specific time, make your bed, do what you got to do. You got to build a routine and you got to be disciplined towards your routine. That's something that's helped me a lot. Obviously, things are a little bit different for me as of right now, currently speaking. I'm not the perfect human, right? I mean, before, something that really helped me out with my discipline when I didn't have like a full-time, I don't know what to call her, full-time cleaning lady, right? I would be doing all of that myself before I hired her, obviously replace that for me to make my life easier. But it's just different things like that, you know?
Go to the gym.
Go to the gym if you want,
Hell yeah, that shit work.
Yeah.
Bro, yeah, that discipline is key. And when I was undisciplined today, I was like, bro, like a little bit in other areas, like I've noticed I've not been as disciplined as I need to be. And like it showed up.
Honestly, this comes down to taking action.
Yeah. If you give off discipline, if you steer off the wagon a little bit, bro, just notice it and get back on. Just like, all right, I got to cut out whatever habits, like, if you partying too much, you drinking too much, smoking too much, cut it out. Like, all right, stop it. Get back on the right track.
Hey, Raul, I got another question for you.
Yeah.
It was a trade I took today on gold. I was looking to go for sells. I noticed that yesterday the H4 candle rejected, what is that, like 1655, somewhere around there.
Okay.
What's up?
Okay.
Yeah, the H4 candle rejected it. And then I looked at the daily candle for yesterday's daily candle, and I saw that it was a bullish candle, but it rejected that same sort of intraday level that I had drawn up based upon my H1 that H4 had already rejected away from. So when I saw that the daily had a nice bearish rejection from it, or it had a bullish candle but a nice rejection away from it, and then the H4 closed bearish with a nice rejection from it. Today I was looking to see, I was like, okay, let's see if sellers can hold that intraday level. Yeah, right there where your cursor was at, just above it where you see that resistance. Yeah, that was where my intraday was drawn. And I was like, okay, let's see if the seller's right. Let's see if sellers can hold this resistance level for another sell opportunity. And it got up there. The H4 candle for today's London and New York session was looking nice. It was showing good rejections. So, once it showed me those rejections, even though they were bullish candles, I was like, all right, let's jump down to lower time frames. Let's see if we can get some good bearish signals. Went down to M30, and I saw a medium probability bearish engulfing candlestick. It didn't close beneath the previous candle's lows, but it did close beneath the previous candle's open. So I took that, and I took it a while before news, because I don't really like to trade news events because they kind of don't really go your way. So I took it a while before news, and the trade ended up in an L because price action pushed up a little bit more and resulted in the same thing I was looking for, which was a bearish move. I basically chalk it up to, like, it was kind of like almost an unavoidable loss. It's just kind of like, part of the game. Based on what I'm saying, like, how do you see it?
Where's your entry?
Let me see. I think it was right there because you're on M30. Let me go back. Let me see.
Because if this is your entry here, I don't possibly see how you could have lost.
No. It wasn't right there. I wish it was right there. No, it wasn't right there. It was further back on M30. Hang on, I'm trying to pull it up.
Could possibly be the one before, the one that you're at.
I think it was at 3:30 a.m. Central Time for me.
Central Time?
Yeah, it was 3:30 a.m. Central Time for me.
What, like, is that like Central?
Yeah. Go to the right, one click. Right there, yeah. The M30 medium probability bearish engulfing candle.
Okay, this one right here.
Right, and that's where I took my sell entry based on that, because, I was expecting price to reject that same intraday level it had already rejected. And I saw that H4 had some nice seller's exhaustion on the bullish candles. And the daily had a nice rejection on the bullish candle.
I personally wouldn't have taken that position. Simply because we look at the risk to reward, you're looking at a 1 to 6 risk to reward. If you're targeting support all the way down here. And that's what the stop loss placement, that's a little bit tighter than what I would be a little bit more comfortably with. Like, that's why when I trade, I try and get into the level as close as I possibly can. Because by the time I take a position, let's say I would have taken a trade maybe like along here versus you take a position right here, that's a whole 24 pip difference. right? At that point, if I have a 24 pip unrealized gain and a 24 pip potential stop loss reward, I'm moving my stop loss to break even, and I could have potentially avoided a loss just by trying to get into the level as close as I possibly can. And if I see price do something like this, then it's all fuck. Well, I missed out on my entry. I'm going to continue to wait, see maybe if we get a retest, something along those lines. You then have price come back up, retest, and then the next candlestick actually rejects, where you could have then looked for another entry. If I would have taken an entry here with my stop loss here, ultimately I would have been stopped out at one point in time, but then I would have seen that the trade is still valid right here, and I would have simply just gotten back in, making back this loss plus all of this potentially.
My risk to reward on this one was a 2.8 to 1.
What was your target?
I know. What'd you say?
Where was your target?
My target, my TP was 1643.65. My stop loss was 1657. I got out a little bit before it hit stop loss, and I got in. The M30 bearish engulfing was my entry signal. I got in on the next candle after it did a slight little pullback, because I know that after it immediately opens, it likes to do a minor pullback and then it tries to go in your favor. So I got in on that next candle.
What was your target?
For the TP? TP was 1643.65.
1643. All right, call it here. Where's your stops?
My stop was 1657 300.
1657 300. Call it right there.
Right, and my entry was 1653.71.
1653.71
for a 2.8.
Okay, I see it.
Almost 3-1. Yeah. Because I waited for that next candle to open up and do the minor pullback it does, and then I clicked my entry for the sell.
Okay, this looks a little bit better. So if it's a 2.8, then obviously the trade is worth taking.
Right.
But then at this point in time, like if you would have gotten stopped out here, you could have just gotten back in right here.
Let me see. What time was that for me? That was 8:30. Yeah, that was close to news. And that's why I stayed away from it, because I know news could have spiked it. And I was like, knowing it, I was like, yeah, you could take this risk. What's up?
Wasn't the news event at 2 p.m. today?
You had one at 7:30, I think, for USD.
What was it?
Let me see. Hold on. I got to open up Forex Factory. For today, the USD news was ADP, non-farm employment change. Yeah.
This was a 9 a.m. signal, though. That happened at 8:15.
Yeah.
That's 45 minutes after news.
So you think it would have? So for you, it's clear, like it's an okay thing to take at 45. Well, okay. Let me see. What is the cutoff time?
This was literally the news event right here.
Right. Yeah.
That's it.
So anything? Let's see. This is the 30-minute time frame. So 30 minutes after that is okay for you.
I mean, if we look at it, then we had the real news event at 2, which I believe was this candlestick
FOMC
right here. Yeah, which was this candlestick right here.
Right.
This candlestick right here. Then this one. So these were the 3. This was like an hour and a half of straight fluctuation.
Mm-hmm.
So I don't want to say news event, you're good after 10, 15 minutes, but if you see that the news event dropped at 8:15 and the candlesticks look like this, it's not really that big of a deal compared to obviously FOMC,
Right. So in this case,
that's a clear as day. Yo, I'm gonna sell. Clear as day.
Because the news didn't really affect the previous candlesticks too crazy, right?
I mean, it's not even about that. It's just like if we look at the actual fluctuation of the news, there wasn't nothing crazy. Where you could then have taken a trade after this engulfing with your stop loss above this high, and could have even had the same potential target of all the way down here. Obviously, your target wouldn't have gotten hit, but you would have up a total of a 3-to-1 R, where at any point in time you could have closed.
Okay, so yeah, that was just my thing, man. Because I shy away from news, and I always have, ever since I first got into this stuff years ago. Because I used to try to trade it, and it would screw me every time. So I make sure I never enter 2 hours before major news for any pair, and I never enter, I'd say, an hour after is what I've typically done.
Yeah, so you have 2 options. Either don't trade news, or ask yourself, how can I use the information that is going to be relayed in this news event to my advantage?
Okay, so with this one, let's say in this case, with gold, with the first news event that did come out at, what was it? It was 7:15 my time. The ADP non-farm employment. How would I interpret that to use to my advantage when trading gold? Because that's something with fundamentals. So how would I interpret that from the fundamentals to add to my technicals?
It's simple. You look up what the news event is and how it affects a certain asset that you're trading.
Okay.
And then you go back into the charts, see every time this news event happened, what the forecast was to actually the numbers that came out, and see what happened on the charts.
Okay. And that's all that I have to do to interpret the fundamentals?
That's how you can start.
Okay, I got you.
Since
Okay.
a lot of people took gold sells, like they were saying, at that intraday level at 1655 or 1656, wherever it was, would you have been cautious taking sells there since we closed above daily support at 1644? Would you have been more looking for buys and being cautious to take sells at the intraday level?
Up here?
Yeah, you know how some people took sells there, just 1655, I think it was. Some people were saying, yeah, essentially there. Would you have been cautious to take sells because we'd closed above 1644, which was our daily level of support and resistance?
Not really. No, I wouldn't have been cautious because again, it comes back down to the fact, okay, we have a 70% chance of buying from here and a 70% chance of selling from here.
Okay.
You know, I would be cautious taking a trade in the middle, 110%.
Yeah.
Hey, Ro, I got 2 questions.
Yeah.
So first, I know you don't look. I was looking at a trade yesterday on GU. I just want to tell me, like, how would you approach this if you could go on GU? All right. So I drew if you go on the 4-hour, I drew a zone from 1.15 to let me see if I can tell you exactly. If you zoom out a little, that's what I'll make sure. All right. So it was there was a zone I drew from 1.15, because there's I want to say exactly. So if you zoom in a little more so you can see a little clearer. All right. So level 1.15, if you can go over there. And I took a trade last night, which was at higher, right there. Yeah, right in that area. So I realized that it was trading above the support line, and ultimately on my levels, I guess I drew a zone, so it was basically in between. So part of it was below the support level and part was above. But I saw that it came back above the support level, and I couldn't tell if it was gonna still go down for for sells, because it was trading above. So I want to make you draw the zone exactly. So I draw that zone to your if you go on the daily, that high, yeah, right there, yeah. So I drew a zone right there exactly, and I saw that it would close. The daily closed below that level, which was the bearish, the little weak candle right there. Yeah, so it closed below. Well, didn't close below, but it was in the zone, and then around London session, 1 a.m. close, it was trading back above. Like, how would you actually take a sell if it was trading back above on the 4-hour?
I wouldn't have been too confident, or how would I have taken a sell?
Yeah, because
okay, that's a little bit. I for some reason I thought you were looking to take buys, which I personally wouldn't have been confident taking buys at all after seeing this daily rejection, right? But in terms of taking sells, realistically, like I'm not too confident I would have taken sells in this area here, right? What I would have potentially waited for is a break and retest of this support zone. But if I would have looked to have taken sells, I would have liked to see a move down and then a pullback back up into the range to establish that this area is still holding as some form of a resistance. So essentially you could do that with like one candlestick, or you could look for an actual move as well, depending on what you're trying to do overall. But like it could have looked something like this where price broke under, retest, rejection, and then look to sell from that point on. Kind of like the same way how price is trading right now. If we look at price like on this daily time frame, right, you have a few areas that you could potentially look to continue to sell from. But essentially, like if I just kind of like grab this, erase that, and drag this over, right? Price is now just closed back under previous resistance. So what I'll wait for is for price to pull back into resistance, see if resistance continues to hold, and then look to sell it back down to the next level.
Okay. All right. Cool. All right. Thank you.
Yeah. All right, guys, I'm gonna answer questions for like 6 more minutes. Anybody else have any other questions?
Okay, so Raul, what setup would you look for to enter buys on gold right now? Because looking now on the hour candle, I mean the 1 hour time frame, obviously it has 5 minutes left to close, but I identified a 3 bar reversal. As you can see on the 30-minute, it looks like a variation setup to me. And I consider entering buys, but I hold myself because it's 8 p.m. and it's not a lot of volatility right now. But as we can see, previous support that was Monday, 31 October, it did the same setup in the same level at the same hour. Like it made a little support, a rejection to the downside, and then came the variation setup, and then continuing going up. And now it's playing literally not the same setup, but quite similar. And would you look for a rejection, maybe a double bottom here on the 70-32 setup to enter buys?
I personally wouldn't look for buys like at all because there's not really much detail for me to want to actually look for buys. I would start looking for buys back above 1644 again. But if we look at the daily time frame, what we have is, a massive, massive rejection to the upside. And you just got to take that into consideration is you have to ask yourself, what does the previous daily candlestick tell me about buyers versus what does it tell me about sellers? At one point in time, buyers had taken price all the way to 1670, which from the open of this candlestick to where price actually was, it's a 200 pip move, right? And by the end of the trading day, sellers came back into the market and brought price all the way down 344 pips past the open all the way down and completely eliminated buyers from the entire picture, right? Sellers really took over this trading day. And then if we pay attention to the 4 hour time frame, we've now closed and broken under our major support zone being 1644 that buyers held a few days ago, right?
Yeah. So if you see, sorry to interrupt, if you start looking at the 70-44 level, if you see a rejection to the downside, would you consider sales? Because of this variation setup on the 4 hour, it looks very strong to me to take and sell. And targeting the 1620 level where that previous support is.
Well, yeah, I would consider taking sells not anywhere near here because we can see an actual pullback until here. This is the area I would like to take a position in. Why? Because it's a previous area of support, not just support, a major area of support based off the weekly, right? And if we have a rejection here, then I would consider taking sells back down to this support level.
Yeah, and it has a safer stop loss than me.
Yeah, and it has a way safer stop loss than where you're taking a trade now. Because again, it's all about quality versus quantity. Because yeah, sure, price can come up to here and then you can maybe secure, 50 pips, right? You could maybe secure 50 pips, but then realistically, if you were to look to take buys, right, your stops need to be under support, which is all the way down here. So you're going to risk 60 pips to only secure 50 pips. Doesn't ultimately make too much sense. And then on top of that, the quality of the setup just isn't that great because we only see literally one bullish candlestick out of this entire huge rejection. Essentially, what you're trying to do is fight all of this bearish momentum, which personally is something that has never worked out long-term for me. There's been times where I'm like, you know what, I'm going to take this buy right here because we're rejecting this minor support, double bottom, blah, 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 blah. And I'll take that buy and maybe make money 1 out of 9 times, But what I realized in the error that I was committing when I was taking trades like this was that although I literally lost 80% of those trades, those 20% would make me forget about those 80%, and I would continue to seek that I guess you could say that I don't even know. I don't even know if to call it rush because I wasn't really even a rush, but those types of trades. And ultimately I removed taking these types of trades out of my trading system, just overall in general, because if I'm taking trades where I'm only winning 20% of the time, why would I do that to my trading account? I'm killing my cash flow.
Yeah, for sure.
That's
That's
just
really logical.
Yeah, that's just at least the way I see things. If you want to take buys and you see that, buys are good for you and you like the setup, then by all means go for it. I'm not going to tell you never to not take position. I would definitely advise against it, but everyone trades very differently.
Yeah, I know. Bro, a last question. I know when you were like um 2 3 years from the start of your trading journey, how do you manage letting the winners run mindset and cutting the losers short? Because lately I'm with my funded account, and bro, this past month, bro, it was like very hard to control my psychology. I was like going up, going down, going up, going down, going up, going down, and right now I'm at the break even. And right now I'm just started looking at my journal, and right now I'm taking the trades that give me 40 confluences, and taking it from the 1 hour, 4 hour to be more um, secure about myself. But that mindset, bro. Sometimes I see a winner, and I just say, okay, let me close it because I'm seeing rejection here. Maybe it will come back. So I close the trade, and then it could be like 1 to 6 or 1 to 5 risk to reward. And then sometimes I feel very secure about the trade, and then it came back. How do you manage to move your stops to break even? Like you wait to your price action hit the TP1 or TP2, or how much pips do you consider a good amount to trail your stop and have a risk-free trade?
Typically, when it comes to me personally, once I'm up like a 1 to 1.5, right, then I feel like I don't need to be risking or have any open risk on the table anymore, simply because I'm already up what I was risking and some. So I don't really like to keep open risk on the table at that point in time. But that's probably one of the hardest parts about trading, is really trying to maximize your reward while decreasing your risk as much as possible. And that's where all the years of experience, is going to come into play. You're only going to get better at that with experience. It's not like in the next few weeks you're going to just automatically start hitting 1 to 5, 1 to 6 risk to reward ratio trades. That's the learning curve in trading. Trading is not something that's perfect, but you just got to find what works for you. If you're good at catching 1 to 3s, then just keep catching 1 to 3s. There's no point for you to start chasing home run trades like a 1 to 6, 1 to 7, 1 to 8, because the more you chase those home run trades that really pay out those huge risk to reward ratios all the time, you're going to see yourself incurring more losses or more break-even trades instead of securing cash flow. Because our goal as traders, especially when we have a fresh trading account, is to create as much cash flow for our trading account as possible. And the only way to do that is by taking profit.
Okay.
Later on,
facts right there. Thank you.
Yeah, later on when you have some cash flow in your account, like for example, like with this trading account, I started it with 150 grand. I now have almost $300,000 in the trading account. I now have some decent amount of cash inside of the trading account for me to fuck around a little bit more. Like if I comfortably wanted to take a 10% risk, which is $30,000 on a trade, I can, and it not affect me because I'm up 100%. But then again, that's a decision that I have to make and that I have to be comfortable with if I do lose that position. Like it's a lot of little things that come into consideration when, doing things like that.
Bro, quick question. Would you like get back to what you said, building up the equity? Like if you're going on a losing streak, do you like go for like 1 to 1 sometimes? Or
No.
1 to 2?
No, because it'll take me forever to make back the losing streak depending on the size of the loss. I keep trading the same. Every trade I lower my risk more and more and more. Because if I take 2 trades at a $15,000 risk and I completely lose those trades, I'm down 30 grand. I'm no longer going to risk 15 grand on a position. I'll risk 10. But if I hit a 1 to 3, I make back my loss. It'll sway more. Like everyone's going to do things very differently. You just have to literally identify what works best for you, right? Because what works best for me may not work best for you. I'm simply here to like guide you and give you different perspective on things, on how you could do things and apply those things to your trading. So ultimately you can get better as a trader. Like I know traders that have lost literally like 800K in a single day and then make it back in the next week by only taking positions that will give them a pretty good risk to reward ratio. While some other traders will lose a few $100,000 and stop their way back up in the matter of 2 or 3 days. Everyone's different. You know, you just got to identify literally what works for you.
Hey, Raul. Yo, Rahul, have you ever saved your account on your phone? Have you ever had a funded account? You almost bloated. You saved it.
Yeah, I remember on one funded account a while ago. It was like January, I think. It was in January. I literally brought the equity down to like I only had 2% left. I took a position for a 2% trade, and obviously it worked out in my favor, and I ended up getting like 30K payout from that funded account after only having 2% left to trade with on that account.
And one time that happened, right? I'm basically in the same situation. I'm trying to like go about it the smart way before I lose it.
Well, what you could do is cut the risk completely in half, where you're risking 0.05%, and you have 4 trades, and then slowly work your way back up.
Cool.
Hey, Raul.
Thank you.
Yeah.
Hey, man, how you doing? I missed the first 8 minutes of the webinar. I was wondering, could you break down gold really quickly?
Basically, what I would look for gold, since all the signs in the higher time frames are telling me bearish, is wait and see if gold could pull back into the 1644 area, where I would then look to sell after I do see the confirmation and the rejection of possible sells. I would sell it back down into 1632, possibly even 1622 if this area breaks. Anything above 1644, I could look for possible buys back up into 1660.
Thank you.
Yeah. Yeah.
Raul, how would you